request Mr. Greg Zulak, Managing Director and Co-Head of Asia Buyout at Carlyle, to come up on stage. He's going to be in conversation with Manisha Girotra. She's the CEO of Moelis India. Huge round of applause for our guests, ladies and gentlemen. And it's over to you, Manisha.
Good afternoon, everyone. Hi, Greg. It's such a pleasure to have you with us. You have such a rich career in the world of finance and investing, having run Asia Buyouts for Carlyle for, I think, over 2 decades. Is that right?
That's correct.
And Carlyle, I'm sure all of us know, is basically a large fund with managing about $500 billion of assets. And Greg, what I really want to know is, because, and this is a personal reason I want to know, because I'm trying to convince my daughter to move back to India from the US. What is it that made you study, grow up in the US, and then pivot your entire career to Asia? Just a little bit of your personal background.
Thank you, and thank you, Manisha. It's a really long story, so I'm going to keep it very short. The short of it is I became an East Asian Studies major at Princeton University. After that, I went into Wall Street for about 10 years, mostly with Lehman Brothers, but I always had a hankering to come out to Asia. So I finally got that chance in 1995, went to Hong Kong, spent a lot of time in Northern Asia. 1998, Carlyle decided to open up its first Asia fund. They tapped me to be one of the founding managing directors, and so I've never looked back since. I first came to India about 2006 or so to begin looking to plant the flag here. We thought it looked like a real opportunity, and we've been in India ever since, and a lot of investments here.
So Greg, you said you've been in India. Carlyle's been in India for over 25 years now. Tell us a little bit about how you've seen our country change structurally. Tell us a little about how you've seen India change over the last 25 years.
Yeah, well, it's changed an enormous amount. When we first were out here, a lot of the what is now private equity investing was done in minority deals. Basically, people were handing out checks. That was pretty much it. Working with promoters to try and grow businesses, but frankly, it was not easy. Oftentimes, this is the old days. The promoters were really looking just for money and not for advice, and they were certainly not looking for partners. Also, if you wanted to exit after having somehow convinced the promoter that you should finally be let out the door, if you wanted to take a company public, it was really by appointment only. There were no deep capital markets. Trying to sell your stake was not easy. So it was a very difficult and different environment for investing in India. But that changed dramatically, I think, in the late 2000s. And today, it's a very different market. Today, there's enormous liquidity in the capital markets, whether it's via IPOs, secondary block trades, M&A sales of companies. Control deals are available. True partnership deals with promoters are also on the cards. And it's a terrific environment now that's just so different from when I first started coming out to India.
You raised some good points there, Greg. I remember when I used to, 25 years ago, go and pitch private equity to a promoter, and even a minority stake, forget, a majority stake, it was a pretty short conversation. I would get thrown out of the room pretty quickly. But now things have changed. Private equity has become a really strong partner of growth for us in India, especially global firms like yourselves. And I see the mindset change. But tell me from your point of view, Greg, how did things change, and how did you make that leap from taking a minority stake to actually doing control deals and partnership deals in India?
I come from a leverage buyout background. That's what firms like Carlyle and KKR and Bain and Blackstone were noted for over the last 30 to 40 years. And, our start was in buying companies in their entirety. So it's really only when we all came out to Asia for some of the markets, whether it's China, whether it's India and others, what we started to do minority deals. And it was a learning curve. We did get used to it. We never really probably loved it until I think today it's a very different type of structuring. But when the opportunity began to arise to do controlled deals in some of the more developing markets like India, everybody sort of jumped on the bandwagon to try and do these buyouts. And today in India, I think is an incredibly vibrant market for doing controlled buyouts, for owning entire companies. The entrepreneurs who have built these businesses, many times they don't have family members who are going to be taking the helm as they try to retire, as the promoter tries to retire on the one hand. On the other hand, they also recognize that they can grow the business comfortably to a certain stage, and then they kind of hit a ceiling. And in order to break through that ceiling, they need a partner who can add some value and add some skills and add some additional muscle to get the business to the next level. So there's been a lot of opportunities to buy companies. I think it started principally in the IT services space, but it's now expanded into financial services, moving into manufacturing, healthcare, whether it's on the services side, pharma side. There have been some big buyout deals as well. And it's an accelerating process. And I think it's good for India. It's good for the entrepreneurs. And overall, it's great for private equity as well, I must say.
How has the value creation playbook changed for India? I know India always trades at rich multiples. Entry levels are always rich, whether it's private equity or public markets. But what do you think changed in terms of the value creation playbook of a lot of our companies? Was it management? Was it board? What do you think gave you the comfort to come in and pay that multiple and be confident that you will make money at those multiples?
That's a great question. In India, there's always been the perception, and to a certain degree it's true, that the valuations in the public markets for sure are very, very high. And justified or not, that's another longer conversation. But whatever the valuations are, when you come into a business, you need to have already put together a value creation plan. And that unlock has to take place through several different levers. The biggest, most important lever is management. So professionalizing the management team, bringing in folks who are either already in India or Indians who are abroad and coming back. The talent pool, this is one of the biggest things that we've seen change over the last 25 years in India. The talent pool of C-suite level world-class managers has expanded dramatically. So when we go in to buy a company, take control, we've already probably identified several candidates. We may already have one candidate, and these folks, when they come in, they bring enough know-how to enhance the entire C-suite that's below them. And they may replace some of those members, they may strengthen some of the positions, and they're going to drive the value creation plan. A lot of the Indian companies, there's always room for improvement in terms of cost positions, procurement, a number of different areas. But generally in India, you're focused on growth. And a lot of the growth can be domestic-oriented, it can be export-oriented, or it can be service-oriented to other parts of the world for IT services. There's lots of means of doing this growth and implementing it, benchmarking against the best-of-class companies around the world, around the region, bringing in new partners through M&A by doing roll-ups and adding on new businesses. You increase your scale, you can increase synergies across the businesses, and of course it also makes it easier, frankly, to exit. So there's so many different levers that can be pulled today versus previously that it's quite a joy doing private equity investing in India these days.
So, Greg, we touched upon how entries become easier and in scale. Companies are being better run. A lot of it thanks to you, private equity investors who brought in good corporate practices. What's also changed is the fact that exits have become easier through the IPO markets, M&A. Talk to us about Carlyle's view on India's IPO market. How do you feel about it? How do you feel about exits through the M&A route? Do you feel more comfortable? Do you feel we have more of a runway in our public markets?
As I mentioned before, when we first started, it was not easy to effect exits. The public markets were very finicky. It was not easy to do very large transactions, whether it was IPOs or secondary blocks. That has deepened tremendously. Today, you can do block trades of anywhere from $100 million up to $500-600 million with not that big a discount to whatever you see in the public market. So there's a lot of liquidity. There's a lot of means of taking money off the table if you're inclined to do so. And we've done a lot of IPOs for our portfolio companies. But you can also now effect some M&A trades. So you can sell entire businesses. You can sell parts of businesses. We've done that as well, and take 2 bites at the apple, sell a little bit up front, keep on later on. So it's a very different world, and that's what gives international investors all the more comfort and confidence to invest in India, to know when you put money into India, there is a very straightforward path to getting money out, and as long as you invest well.
I think we are out of time. So if I could ask you for one piece of advice to your younger self and one piece of advice to an Indian founder starting up today, what would it be?
Well, I think for those folks who are getting into private equity, one of the things that you need to do is create differentiation between what you're doing and what other folks are going to be doing. You need to have sectoral focus is absolutely important. There's always a balance between being a jack of all trades and being a sector expert. But having a sector enables you to really understand what's happening in that industry, know all the players, know all the management team members, know best practices from a global basis. I think that's very important. And if you're a promoter in India and you're looking for private equity to be your partner, look not just for the money. The key thing is it's a marriage. You want to find the deal team, the firm that's going to be your thought partner, that's going to be providing a lot of help to you. It's a marriage, and think of it that way. Never look for the top dollar. Look for what the value add you think you can get by working together with the private equity partner.
Well summed up, Greg. It really is a marriage. Thank you for your time. It was a pleasure to speak with you.
Thank you, Manisha.